right. Welcome to Business as Unusual, the live stream where we delve into the most pressing issues and emerging trends shaping the business landscape. We're going to get started in just a few minutes, but if you have questions, please feel free to add them to the chat and I'll try to get to all of them during today's session. I'm Kathy Steele and I'm the CEO of Red Caffeine and your host today. And for those of you unfamiliar with Red Caffeine, we're a growth consultancy and we build and execute go-to-market plans for ambitious mid-market companies. Our service offering includes a fractional team led by a senior level marketing leader that enables a business to scale rapidly without hiring a wide variety of full-time staff members to move a growth plan forward. And today I'm joined by Ed Barone, a wealth manager with Evergreen Wealth Solutions and a fellow EOS business runner. We actually met at an EOS conference, so that was super cool. And if you're not familiar with EOS, that's the Entrepreneurial Operating System. But you might be wondering why a company like Red Caffeine is talking about a topic like business exit. I got a lot of texts and emails from friends. They're like, is there something I should be knowing about? But that's not it. We support exits both on the buy and sell side. And as growth consulting plays a really pivotal role in a business exit planning, offering a strategic pathway to enhance the value and appeal of a business before it changes hands. We focus on identifying and implementing growth opportunities, ensuring the business is operating at its peak potential when it's time to exit. This approach not only maximizes the financial return for the business owner, but it makes it more attractive to potential buyers and successors. So, giving you a lot more variability in terms of the types of exits that you can if you've got a really sound growth plan. On the buy side, we also help businesses with a pre-assessment of their target assets, as well as growth planning and execution post an acquisition. So helping buyers integrate brands, cultures, and support them with growth strategies to get the most out of that new asset. So this is a topic that I'm really, really excited to dig into. So Ed, I want to ask you if you would just give a short intro to yourself and Evergreen Wealth Solutions, as well as tell us something interesting that's not on your bio.
Well, something interesting that's not on my bio is early in my career, I was an executive chef and beverage director, managed some pretty large conference centers for Marriott and the Aramark corporations way back when. So still love that as a hobby, cooking, and actually, running large organizations like that and being responsible for teams of 100 people and so forth and budgets. I understand business owners, and it's really led me into probably about 10 years ago, I got into exit planning for business owners. And then about 3 to 4 years ago, I got my certified business exiting consulting certification through the International Exit Planning Association out of Boston. So fun. I love working with business owners. Every exit plan is customized and different for the family, the owners. So it's a fun business.
Yeah, absolutely. Well, I too came from the restaurant industry, so we share that. And I'm fortunately married to somebody that loves to cook and cooks very well. So we would be starving if that was up to me. So love that commonality in our backgrounds. All right, so let's jump in. As a owner of a leader of a private company, why, just kind of at that top line level, why is it important to plan for an exit? I think there's a lot of fear around it, but I'd love to hear just that top line rationale.
Sure. I think too many business owners, we have a line in our association, and it's pretty much exiting your business as a process, not a transaction or an event, because it's a complex scenario to sell your business. There's many advisors involved. It's about getting yourself personally ready. Is the business ready, which we'll hit on as our presentation continues. But there's so many facets to getting yourself ready, financially, mentally, as well as your business ready to be sold and run by somebody else.
Yeah.
and the timing of when you want to exit and in what terms matter. I mean, so, we often sit down and just try to cipher what's important to the business owner. And it's usually three key areas. Of course, their family and their financial well being, their employees, and the success and carry on of their business in the future. They tend to be, with every business owner, their primary priorities. So I think exit planning helps a business owner achieve those priorities and goals.
Yeah, I mean, we always are advocating for building valuation in a business, because you just never know. The deal of a lifetime could come out of nowhere, and you want to be ready and prepared to be able to take advantage of something like that.
Yeah.
So take us through. I think as I've educated myself more over the last 10 to 15 years of running Red Caffeine, I've really gotten more invested in thinking about succession planning and exit. But I don't know that in my earlier, kind of research, I realized how many options are out there for exits. So can you take us through some of those selling options?
Yeah, let's move to the next slide. So, when you look at it, and I don't think many business owners break it down this way, but this is where the complexity starts. And, our first conversation usually begins with what is motivating them to sell, and then what are the potential buyers that are out there, right? So when we look at it, there's 5 types of transfers that can occur. And that's an ESOP, which is basically a great option if you want to retain key employees, reward employees, as well as if you want a slow exit, right? So you can do an ESOP, you can do it in stages of 10%, 20%, eventually sell 50% to the ESOP, and then slowly transition out of the business over time, right? So it gives you a lot of flexibility. It allows you to diversify your wealth by taking money out of the business, putting it into your personal wallet, and still have a business that if you love running and you enjoy what you're doing, you just diversified your wealth. And it can be very tax advantageous for a business owner to consider an ESOP. The IRS has wrote favorable tax regulations around an ESOP because you're rewarding your employees, right, by doing one in addition to a 401k. So the IRS has given you some very nice, effective tax regulations to make it very, very beneficial to the owner. The next one, and I'll kind of lump transfer to management and family together because there's a little bit of similarities there. But when you're transferring the management family, a couple of the things to think about: are they ready? Right. I always break it down when you're looking at it. Your managers and your family. There's managers, good managers. There's good leaders, and there's good owners. And they're really 3 different skill sets, right? So understanding the people you want to transfer this to, the management team. Let's talk about the management team. They may be great managers. Are they great leaders? Do they have what it takes to be an owner? And if you want to go down that road, there's coaching available, advisors out there who work with those individuals to get them to the next level. You also have to understand that there's inherent risk with all these transfers, but transferring to a management team means you're probably financing part of the sale because many managers do not have the assets to buy the business, which means you're going to be in the business longer. And, you really want your management team capable, what I just touched on, of taking over the business because you're basically, keeping 20-30% at a minimum of equity in the new business that you want to get out of it eventually when they're ready to buy you out completely, right? The structure depends on the deal structure. Transferring the family, same thing. It's a gradual transfer. Is your family ready? Do they want it? Right. So the communication to the family, there's often times that I don't think it's effectively communicated. I think there's assumptions made by the parent or by the child of that the business is coming to me or I'm transferring my business to you. Do they really want it? Have you had that conversation? Right. And those conversations are vital because there could be a lot of time wasted and not planning to sell to an outsider. That could be occurring because you assume your child wants it. The fourth option is a private equity group recapitalization. But basically, when you're selling to a private equity group, again, you're probably keeping 20% in the business. You're rolling over equity, understanding that you no longer, own the company, but you do own a small piece of it, but you own a small piece of a much larger company
Right.
because they rolled up several companies in your industry to create a much larger company to eventually sell. Understanding what role you're going to play in the new entity, if any role. I've had clients who were told they were going to be a consultant, and they were never called for anything, and they're intellectually, emotionally, it was tough on them not to be called and ask for their opinion in running the company. I've had business owners who've stayed with and worked in the business. One family in particular, dad sold it, son-in-law CFO. Dad was told you could stay in the business as long as you want, but when you're out, your son-in-law takes over. It took him about a month. It took dad about a month of watching them change their business quickly and having no say in the decision making to say, okay, I'm out of here.
Yeah.
Right now, the son-in-law stepped up. He's now running 4 companies for the private equity firm. So it was really great to see. So, just understanding who is going to be the business partner and really having that deep conversation of what is your role, so you understand it and understand you're not going to be called for decision making, right? It's a much larger company, but it can be a very, I've seen most of my clients who have sold the private equity group, they sell the first 80%. We call that the first bite of the apple.
Right.
And then they sell the second bite of the apple. I've seen it go as quickly as 1 year or 5 years later. And that 20% sometimes triples, quadruples that you left in the business. So it can be very financially rewarding. Just understand your role and, do you want to be in that situation of how you're going to play in the new company. And then the
Yeah.
last one is selling to an outsider, which tends to be a synergy. We call them a synergy buyer. Tends to be
Strategic.
competition, can be probably a higher valuation, and that they're going to place on the business because of the synergies they're going to see and be able to cut cost, or they're going to improve purchasing capacity, right, and get better breaks on purchasing depending on the industry you're in. So there's lots of benefits, and sometimes your best pricing may come from a competitor buying you because of the cost efficiencies after the acquisition. So understanding all these types and understanding that each one of them has a different range of values.
So Ed, I'm going to ask a quick question. So it sounds like PE and like strategic tend to have the most like cash out potential. Is there a like revenue or EBITDA that sort of puts you into one category or another more
So,
specifically?
when you look at the EBITDA, it's by industry, I'm going to say, and then it's by profitability. So certain industries, I have clients who are in the beverage space. Uh, 5, 6 years ago, those companies were selling at 14, 15 times multiples.
Wow.
The microbrews, right? Now,
Right.
recently, I think they've come down to 8, 9, right? So it depends on what's going on in your industry. It
Sure.
also depends on the size of the company and your profitability. A lot of time in tech space, I've seen anything with EBITDA under 1 million. You're getting a 4 to 5 multiple. Break 1 million, and you're jumping to 6, 7 multiple,
Got it.
right?
Got
So it
it.
really depends on industry size. The other thing that happens is what we talked about, you and I, is your business transferable, right? Because when you talked about EOS earlier, and if you're running on EOS like we are and you are, and I see the benefits of it, we've been doing it 3 years, but you have put the into place processes, you have developed a leadership team, which really de-risk the business for the new owners,
Yeah.
right? When you have all that in place and your company's running much better because you have the systems, processes, and the right people in the right seats and the right leadership, and then you have a history of data that you created that they can look back and see your growth and what's happened in your business, you can get a higher multiple sometimes because you have a better run business, uh, because it's easier. So lots of factors come into value.
Okay, great. Well, let's start by like looking, you've got a really kind of interesting 6-step process that you use to help get a client ready for exit. Can you step us through that 6-step process?
Sure, let's move to the next slide. So yeah, this process is a great process. So we initially sit down with the client and we get to understand their goals. I alluded to them at a much higher level of the three things that are important, which is family and financials, employees being taken care of, and the business continuing its success with the new owners. But we even dive deeper on that, right? What's important to that family from a financial standpoint, from their heir standpoint? Is there charitable giving that they want to occur prior to the sale, after the sale, at death? So we take a really holistic financial planning look from a goal perspective at that and estate planning. And then we start to have a conversation around employees and what, the culture matters. So identifying that company that cultures are going to align, your employees are going to do well. That matters to some business owners. I've seen deals pulled because of the potential buyer has not inquired about the employees and who the key people are, and the owner was scared that his people were just going to be let go, so he pulled the deal. Uh, so there's things that we try and dive deep and flesh out. We try to understand the business, what's his goals for the business, and we start to set that parameter. Then we dive into the financial and mental readiness. The financial readiness is really on the personal side. We may have a business owner call and say, "Hey, I'm getting 20 million," and then they realize they're netting 10 million after taxes, fees, liabilities paid off, and is that going to maintain their lifestyle?
Right, right.
So we do a deep dive of. I have it's funny. I'm working with a business owner. And we started a conversation a couple of years ago, and I said, "What's your personal expenses?" He said, "Oh, 5 to 10,000 a month." I said, "Can't be. I know his lifestyle. I know him well." I said, "It can't be." I said, "So we're going to sit down. We're going to go through this. Well, it's up over 300,000 a year, right? Because as a business owner, you're taking advantage of things that you can run through the business, which is
Yeah,
pre-tax money, your car, your vehicles, right? Some of your memberships that you're going to continue, but you're using pre-tax money. So now we're going to use post-tax money. How does that impact you to pay for those expenses? So we really dive deep on the personal financial situation. The mental readiness becomes the biggest obstacle for a lot of business owners, uh, because it really becomes about, are they mentally ready to step away from a passion that they really love doing? I classify business owners in three areas, and it's the craftsman, which is about 75% of the business owners. And a business evolved because they were really good about what they did and they loved what they did. And a business and a company grew. Then you have, I call them the freedom fighters, 20% of them just can't work for anybody else. And then you have 5%, which are serial entrepreneurs. And those guys are ready to sell a business because they just love building, growing, selling. They don't get attached to any particular business. But it's really the craftsman, I think, that has the hardest time selling, because he loves what he does. And what are you going to replace that with? So I ask a business owner through this mental readiness is, what is their business card going to say the next day after they sell the business? I have business owners who have sold in their 50s, well off, they're bored.
right,
They're
right.
not being mentally challenged, right? And, you try and prepare them for it. You're not going to golf 60 hours a week.
Right.
80 hours a week. You're not going to fish that long. You're not going to play with your grandchildren that long. So you really got to start thinking about what are you going to do afterwards? Are you going to become a consultant or an advisor? Are you going to get more involved into charitable organizations that you have a passion about, right? And helping others. So it's a really tough thing. And the other piece of that is your business is your ego for business owners. It's who they are in the community. And for them to lose that overnight sometimes is very challenging, right? Not to be that person that they've been for the last 30, 40 years. So it's a sense of feeling a loss of identity of who they are.
Yeah, absolutely. I mean, I think I've talked to so many people that have exited and expected something different. I really respect a close friend of mine just recently transitioned. They've got an ESOP, but he actually got a coach that had exited businesses multiple times just to be able to have somebody help him through that process. Because to your point, most of us start businesses because we love what we do. So imagining, that gap is pretty challenging for many business runners.
Yeah, I recently met with a president from a university who was 27 years at that university in the last 10, 15 as president. And that first year was very challenging for her. She just left her family, really had to remove herself so the new president could step in and no one called her, right? But she really felt a loss of connection with the people she'd known for so long. And what was she replacing it with? So you may not just have to be a business owner. You could be just an
Sure.
executive or a person who loves what you do. So think about
Yes.
that as you get ready to retire. And then the third is we try and we'll go through this, but discovering the type of owner they are. And we'll go through that in the next couple of slides. So I won't spend a lot of time. Learning your exit options, which we talked about in the previous slide. What are the 5 exits? And then knowing the value of each exit, because each one of those exits are going to have a different valuation and a different range, right? And that's going to tie back into then your financial readiness. Which exit is going to provide you with the funds, but also which exit is also going to provide you with the other priorities. Do you want a quick exit? Do you want a long exit? What does that deal structure look like? So lots of factors that we start to tie in by knowing the value of your exit from all the conversation and discovery that's happened with this. And then the last one is execute your plan and protect your wealth. And that is really, all right, here's where you're at. Here's where you're at on a personal level. Do we need to grow the value of the business, which we bring in people like you? Most of the business owners that I work with, a lot of them that are under the 40, 50 million in value, sometimes we need to grow the business a little bit more to meet their needs financially. And we look for growth advisors like yourself and your firm to come in and help them. There's other advisors. There can be 5, 6 different advisors that we start to introduce to this process to execute your plan. Some critical advisors that need to come in. And we get attorneys involved, and we look at your estate plan. The corporate docs, are they in good order? So, is then you need an M&A attorney, right? Then you need an M&A advisor to take you to market. There's other consultants we have to start bringing in to execute your plan. Do we need to do an HR audit to make sure your personnel files are in good order, right? So you can start to see there's many things that really need to start happening to make sure that your business is ready to be sold and is transferable. Because the cleaner you are going to market, the more success and the better price you're going to have, because you've reduced a lot of potential risk that will occur that people would discover through due diligence.
Yeah, and I think it's interesting because a lot of times I see um, owners feeling less inclined to invest as
Mm-hmm.
they're starting to prep for exit, which I get to a point. And I understand, that everything falls back and you're looking at creating a strong EBITDA. But if you are lacking and you don't have that transferable business, I mean, there's going to be things that you're not going to get in terms of valuation because you have underinvested in systemizing some things. So I think that's a really important note, is
Absolutely.
we'll kind of talk about like timeline and those types of things in a bit. But
Yeah,
I
the more risks that are discovered through due diligence in the sale tends to be your holdbacks are getting larger, or your
Mhm.
earnouts are going to get larger, and you're getting less at the closing, right? So to your point, having everything in place and having the right advisors at the table to explain the history of the company and all those things, and make sure we can explain any anomalies that occurred in your business and things that have occurred and have been cleaned up. So
Yeah, I love it. All right. I know we're going to dive into a couple of these things. So I think we're going to the next slide.
so yeah, so on our website, we also have a division called egexits.com, and this is where all our exit planning information for anybody who wants to go look. But this is a survey we have out there that people can go out and take, and it's the Business Readiness Index Survey. And clients take it. It takes about 5-10 minutes, and you go through it. And we want to understand where you are from a financial readiness and where you are from a mental readiness. And this is important for us to know because this is where we need to know where we start you in the process. Right. So if you're in the bottom left of low financial readiness, low mental readiness, means we need to stay, probably grow the business. There's potential extra strategies there that we'll get to. Or are you you have high financial readiness, but you love what you do and you're not mentally ready to leave. The bottom right corner, get me out the highest price. You're mentally just done and the financials aren't as important, right? You're just
Yeah.
exhausted. The industry's changed, whatever's going on. Our goal through exit planning.
Social unrest. I mean, all the things we've gone through in the last few years.
Absolutely. I have 2 business owners who we've engaged in the last 6 months who walked in and we had a 2-hour conversation at the end and said, I'm tapping out. I'm done. Right. They've been through a lot over the last 10-15 years running the business. But the goal is really through our exit planning is to get you to the top right corner where you have high financial readiness, high mental readiness. Because once we get there, you have all the options. And when that first slide, and on what terms, you get to dictate the terms if we can get you there.
That's a beautiful thing.
Right. And that's our goal, is to get you to the point where you have all the options of exiting possible. And it helps with deal structure potentially too, right? If you have high financial readiness and we know everything. So that's our goal. So we can move to the next slide. So same chart, right? But now we're starting to lay over the 5 exit strategies and what type of owner you are and what type of exit strategies could apply to where you're at on this chart. So again, if you have low mental readiness and low financial readiness, the bottom left quadrant, private equity group could come in, give you some money now, have a holdback, have you roll over some equity and let it grow. ESOP could be a great way to start having a potential purchase or transfer of the business. High financial readiness up top, low mental, management buyout, gifting the family, an ESOP again, right? The bottom right is pretty much, it's going to be get me out, and it's going to be a buyer, probably a outside buyer most likely, because you want out of the business. You don't want to hang around in the business over a couple years. So we typically see an outside buyer coming in for that. And then the top right corner, as you can see, all the options are available. That's where we want to get you, right? Whether you want to give some shares to charity, sell it outright to a private equity group or an investor or synergy buyer, ESOP. You don't see management buyout there because sometimes you're rolling over equity for a while. Doesn't mean you can't do it because you have the flexibility, and we got you rich and ready to go to get you transferring the business. So let's move to the next slide. So through the exit process, right, we really want to know the value of the business. And typically, once we have a client who says, all right, I want to move forward with this, we start the evaluation process, right? And let's get a value, because we need to understand from a financial readiness, what do you need to net from the business? So, if we looked at an internal transfer, how is that going to be valued, right? So if you look at a ESOP, you look at gifting to family, the IRS says they want you to use a fair market value to transfer that. And some discounts may apply if we get out there and we do this ahead of time. And that goes with any type of sale that I'm going to touch base on real quick is, if selling your business is going to put you into federal state tax planning, we want to know that too, because there's good estate planning strategies, charitable gifting strategies that we need to develop well before you go to market.
Right.
Right? Or the IRS, you're going to try and take this to market and do these things at the last minute, and the IRS is going to say, no, no, no. We know what you're doing now, right? But if you do it, and that's why we like to tell people to start planning a couple years out, 3 at a minimum, 5 better. I have one client on a 10-year exit. So it really depends on the client. And then you get down to a management buyout, which kind of, crosses over from a value standpoint to an external transfer.
Okay.
And the external transfer, you have the private equity group recap or a sale to a competitor. You're going to get market value. There's an investment value people are going to place on it. I talked a little bit about synergy value. If it's a competitor, if it's a private equity group, they're rolling you up into a industry company that's in your industry that's just much bigger. So there's opportunities there to get a better valuation and better cash on the deal. And deal structure matters. So, and that's where a management buyout, you're probably going to look at it from an investment value standpoint. But that deal structure is going to be a little bit different because of the scenarios of probably having to self-finance some of it for the buyers.
Yeah. So I think the next slide, you do a lot of surveying with your customer base. And so this, gives sort of the landscape of where typical business owners kind of fall in. So talk about some of this analysis that you do and all
Sure.
of that.
Sure. This is the same slide again, financial readiness, mental readiness, right? And we have a client take the survey early on in the conversation to see where they're falling. What we've seen over the last 15 years is anywhere between 82 to 85% fall in the low mental and low financial readiness categories. And we really need to get you over to that top right quadrant. Of the total surveys that we typically see, about 66% end up in the bottom left quadrant. So that's a pretty, of the 82, of the 100%, 66% are down in that bottom left quadrant. So exit planning is very useful for getting a person to where they need to be on the exit, and know what they need to extract, and the mental readiness and all those conversations that got to occur.
Yeah, I wasn't incredibly shocked by this data, but I think it really is a wake-up call to being prepared and doing that investment in both diligence on your, in building up your business and making sure really looked at your personal finance and have those two plans sort of working in the same, on the same track. All right, so let's kind of switch gears because I think this is really important to talk about business readiness. And we talked a little bit about it in the start of the conversation. It is creating that transferable business. Let's dive into that topic.
Yeah. So let's move to the next slide. But we take business owners through, we call it the ODI, the Owner Dependence Index. Is a survey, again, 10, 15 minutes. And we take business owners through that. So we can get a score of how much the business is dependent on the owner in 8 areas of the business: sales, governance, finance. How involved are they, right? Because if they're way involved and they're controlling everything, that's not good from a risk standpoint for a buyer,
Right.
right? So we talked about creating that management team then, right? Number two, who's your management team? Are they future successors and owners, or are they key assets to the new owner, right? Because they're the private equity group, the synergy buyers, the investor who just buys multiple businesses and is not CEO of any. The more you can have a leadership team running that company with little involvement from you, now you're at a transferable business, and you're going to get a better price as a result because you're going to have more buyers to the table. They're going to see a lower risk profile in buying your company because it's just much better run. Then there's the industry activity assessment. So every business owner, what's going on in their industry, we do that from a buy standpoint. And then as well as the company performance assessment. And what are the metrics that are being looked at in your industry by buyers that are going to increase the value of your business, and what are they looking for as far as those metrics underneath the hood of your business?
Well, I'd love to dive into that a little bit, but let's go back to, the first one just for a minute. And as you have been evaluating businesses, where do most businesses fall on that 1 to 100 scale? I'm curious.
They're anywhere from about 55%, right, give or take. Businesses are dependent on the business owner, about 55%. Depending on the area, they could be 80% in one of those categories, 90% in one category. And we start to see those numbers. We're like, okay, you're too involved in this area, too involved in this area. Who's your leadership team? Who should we be developing, or is he on board and you're just not willing to give up control?
Yeah.
I find a lot of business owners are very control oriented too. It's
Yes.
just innate. It's who they are. It's their baby. They build it ground up, and they don't think anybody can do what they do. And that's hard for them to let go. So, we start to identify where are they at in each of those categories, those 8 categories, and how do we reduce the dependency in those categories.
Yeah. And I think, being both, as we talked about earlier in the discussion, is being both EOS companies. We're huge fans of process. And like, we really advocate for revenue generation systems, building that repeatable, scalable sales
Mhm.
process. What are some of the other performance areas that help improve company valuation?
You know, what at that point we start to look at and understand where their issues are from a standpoint of sales and marketing. Is there sales and marketing issues that a firm like yours can come in and help? How involved are they on the finance side of things? Do they need a CFO? Oftentimes, I find that a business owner does not want to pay for a CFO, and they don't realize the value of having a good CFO and how they can improve the performance and the numbers of a company. Ones that eventually hire one, all of a sudden the light bulb goes off,
Right.
right? When they get to that level and comfort level. So there's lots of areas that really dig under the hood. We also look at and we do a profitability analysis. The last one we did for a client was a tech industry. Uh, good, well-run company. Uh, but there was an area where they were losing on their product sales of hardware, which wasn't a big part of the revenue, but they were losing 182,000 on their hardware that they didn't
Mm.
know about. So when you look at that and you're at a 5 multiple, if you can just get that to break even, you just improve the value of your business by $1 million,
Yeah, that's incredible.
right? So we really try to help them run more effectively. We look at profitability as well and trying to improve that from a valuation standpoint.
Yeah, I've seen a lot of companies in the space looking at their tech infrastructure, cybersecurity? Is there, an appetite for de-risking those particular parts of a business?
Absolutely. We recommend, depending on the industry and how cyber crime and fraud can hurt a company's reputation, the reputational damage can be huge if you're a finance company, right, and handling people's money. So we really dive deep into that. Other areas, bringing an HR person. We recommend doing an HR audit. I was just did a podcast with an M&A attorney, and she said, "Don't try and hide a personnel issue because a private equity group will find it in the files."
Mm,
Right?
okay.
Go in and clean up those issues, settle disputes, get them signed off and done. Right? Clean up those problems because they, again, a buyer sees risk when they go into due diligence. So there's lots of areas. There's property and casualty audits that should probably occur. Did you have the right liability coverage over the last 5 years if you're selling products that could break, hurt people, right? Anything that could cause harm and create lawsuits? Did you have the right liability coverage for the last 5 years or 10 years on the products or services you're selling? So there's, as you can see, as we talk about how complex this can be, in selling your business and getting prepared through the exit plan, but you can really drive value.
Yeah,
You're running
absolutely.
it. If you're looking at this and you're looking at everything, you can really drive value in this and so forth. So there's many other advisors you could bring to the table. We don't do all these things.
Sure.
We can't wear all those hats, right? We
Yeah.
run the exit plan and then we reach out to certain advisors as we identify opportunities to be improved.
Ed, I did get a couple questions from our audience. So you talked about owner involvement being a risk. How do you work with owners to de-risk during that transition plan? Just what does that playbook look like? Is that something that you offer?
So I have a group of CEOs that I'm involved with, who they all wear different hats and different consulting. But you and I know that, to me, EOS, if you're not running EOS, consider EOS. I think EOS is part of the exit planning process to create a transferable business,
Yeah.
right? It makes you develop that leadership team. It makes you look at what are just the key processes you need to have in place that drive your business. Don't over process everything, but what are the key processes that improve client satisfaction and profitability that you should be running, right? What's your vision for the company? All these things come into play as far as de-risking the business. And I think, the one book that I read before we adopted EOS was Traction, and that's what it's based
Sure.
on, by Gino Wickman. And it's interesting that there are private equity companies now
Exactly, right?
who look for EOS run companies
Yeah. Yeah.
because there was a data scorecard to keep data that you track weekly, important numbers. And it just, it makes all this, when you think about that, and when you hire the investment banker to come in and sell your business, and you can hand him 5 years of the scorecards you created, the measurables, and how you looked at your numbers and managed, and you could show the growth based on what you're measuring and so forth over 5 years. It just helps the story, right? And it shows you're a good run company. You have documented processes in place. It just it makes the new owner feel much better about buying your company.
Yeah, and I mean, frankly, just having, we're working right now on some acquisition integrations, and when there is, where they're void of data,
Mhm.
it's really challenging. So it takes a lot to, kind of bring them up to, to the right level to be able to integrate them into the other organizations. So very important. There was another question. Earlier, you mentioned a separate website that was a resource for business owners to help them onboard. What's a piece of advice you have for someone who might be on the fence or scared to take that first step? So it sounds like, if I'm hearing this correctly, that, you know, this does, I do think there's a little bit of fear for so many reasons around talking about sale. I also think there's a lot of cloak and, like behind the scenes where it's not very transparent to other people in your organization. And I'm not a huge advocate of that, but what are some things that you can, give to our audience to help them feel more confident to at least taking that first step?
So one thing I'll say is I just presented at a conference down in Nashville about 2 months ago. A client of mine in the tech space has a study group of several tech entrepreneurs, and they share and they keep each other accountable. And they asked me to present on exit planning. And of the ones in the room, there was only one person who had a business succession plan in place. And it seems, where am I going with this, right? But I always tell you that when a business owner starts an exit plan, does not mean you have to sell, right?
Exactly. Yeah.
If
I think
you
I
are
started with,
preparing the company in the event of death, disability, something drastic happens, or you can't run the company no more, you have started to map out and create a transferable company,
right.
right? And your company's probably going to improve when you're running on all cylinders of covering all the things that we just discussed that EOS can bring to the table. You tend to see improvements along the line.
So I've got I really agree with you so much on the whole, creating systems and processes and the EOS structure. I mean, I just think it's been a tremendous asset to running my business. But what about things like brand when we're talking about the intangibles that factor into valuation? Can you speak to some of the other types of intangibles like brand in getting a good?
Listen, at the end of the day, that's what we're selling, right? We're
Yeah,
selling the brand. We can all produce a product, but we talk about goodwill, but brand is what you're selling. Uh, what's your reputation in the market? Because if you have a good reputation, your business is growing, you have a reliable product or service, that's all correlates to your brand and value of your company, right? I look at some of my clients, I'll go back to the beverage industry, but creating a brand in that industry that eventually starts taking over shelf space. The big boys know this, and once you take over so much shelf space from them, they're coming back to buy you, right? So brand is really important, and I think what you do for clients at Red Caffeine and helping them develop that brand also gets their name out there to potential buyers. Bringing that brand awareness to market and creating that brand and that identity that you're really good in this space and what you do in these spaces is critical to a successful and maximizing the value of your business.
yeah. I couldn't agree more, and I really appreciate that little shameless plug you did for me.
No,
But
no, it's what we're selling is our brand.
so, Ed, my friend Bo Burlingham wrote a book called Finish Big. I think it's an exceptional exit planning book that tells some real stories around, exiting your business. Is there any other resources that suggest to potential
Yeah.
clients?
So the founder of the association that I got my certification for business exit consulting through, the International Exit Planning Association, John Leonetti was the founder. I think it's 12, 14 years ago now. But he wrote a great book called Exiting Your Business and Protecting Your Wealth. I think is a great book for business owners to read. The other book for the family businesses I like is Family Business Mistakes by Roger Warren. So there are two books off the top of my head I'd recommend to business owners, as well as Traction.
Yeah,
Traction to me is a part of exit planning.
I 100% agree. And, we work a lot in manufacturing, and there's a lot of legacy family businesses. It's, we're fortunate to work with a couple businesses that celebrated 100 years. And that's just kind of a remarkable feat. But so, wow, I cannot believe we're, starting to get to the end of the hour. Is there anything else that you can share with us that we should, think about, what would be like your top three things in 2024 that people should have on their mind in terms of building more value in the organization?
Building more value, I'd really, I'd start to look at one thing as a business owner is how involved are you in everyday aspect of the business, and how do you start grooming or developing someone to step into your shoes, to take over those reins, because that takes a while. That's not an overnight thing to
Yeah,
accomplish, right?
I
Uh,
agree.
Understanding what is your niche in the marketplace, and I think working with an organization like Red Caffeine, to how do you build that brand in the marketplace and become a true, whether you're a regional company, national company, how are you getting that message out that you are the best at whatever you do, right? I think that's important. And then I think the other thing is, as far as I look at it, it's never too early to begin exit planning, right?
Yeah,
But one day it may be too late, because I've seen some bad situations where exit planning wasn't, or succession planning wasn't planned for, and the value of the business, they did not get the value of the business they did when it occurred, because of circumstances of how the business had to be sold or when it had to be sold, because of uncontrollable circumstances. So, I would say if you haven't thought about exit planning, succession planning, I would say make that a priority. And the other thing is go back and look at your corporate books. I'm getting a couple things here because it just keeps flowing to me, everything you need.
sure.
But there's so many businesses that, they started their corporate books and their documents, and maybe they bought out a partner and they never went back and revised the shareholder agreement. Right. So
Yeah.
there's all these little things that need to be cleaned up, looked at, and getting your house in order. Right. And good financials. One last thing I can't say is so important to get your business to go on the market is make sure you have the right CPA who understands what it takes to take a business to market to sell it, and what financials are going to be looked at. Because when an investment banker goes in there, he's going to go back 3 to 5 years, and he's going to want good financials to look at, or they're going to start from the scratch and say, all right, we got to go get a CPA, or you need to change CPAs because the records we have are not good for us to go to market. They're not clear, they're not concise, they don't provide the detail we need, that we can explain to a buyer as well. So, as you can see, there's a lots of things. Prioritize them. What can you tackle when? Uh, but that's a few things. I can think of another dozen, but that's a few.
All right. Well, we will circle back next year for your laundry list for 2025. But thank you so much. So, Parker, can you advance a slide and let people know how to get in touch with Ed? If they've got more questions, we really want to thank you so much. This was incredibly valuable. You can reach out to Ed on LinkedIn. He's also shared his email address here. Just put business as unusual in the subject line so he knows that you came from our live
Great
stream
idea.
today. And then I want to make sure to thank our sponsors. Without them, we would not be able to put on all the content that we do for business as unusual. So we're really grateful to Insperity, the folks at Insperity, M3 Learning, and HR Source, our three sponsors. And I'm excited. I cannot believe we are, this is the last business as unusual of 2023. And we are really, really excited about our next guest that will be here in January. We will be talking about customer research. It's something that we really, really believe in. Seems like a no-brainer. Talk to your customers and find out what they want. But we really hope you'll join us on January 11th for an exclusive session with Ryan Paul Gibson. He's the co-founder of Content Lift. And we're going to dive into the art of understanding your customers' needs, behaviors, and preferences. And Ryan and I are going to talk through the techniques we both use in our organizations to conduct effective customer research and how we're helping our clients build strong customer relationships through that information. This session is a must for leaders that are navigating complex markets which, I really am challenged to know that there's not any very complex markets today, and, help us have the ability to sharpen our competitive edge. So we welcome you to start your year off right and elevate your business by centering your growth strategy around your customers. That seems like really sage advice. And so don't miss this opportunity to join us in January. The registration will be open by tomorrow. So again, thanks, Ed. I am really thrilled to have had you on our show today. And thank you.
Thank you. It was enjoyable. Everyone have a great holiday and a great new year.
Yeah, let's go kick some butt in 2024.
Absolutely. All right.